Joining us right now to look ahead is Andersen Capital Management Chief Investment Officer Peter Andersen. Peter, good to see you. Thanks so much for being here. Give us your take on the strength of the consumer right now and what you're expecting from 2023 amidst all of these expectations of recession.
Well, we're certainly getting a mixed picture about the consumer, Maria, but I do think that we are struggling to move forward. And in spite of the high inflation, the consumer remains strong. I'm looking toward the holiday season to be one of strength, and I think that we will be very surprised by that. Going into the – go ahead.
No. Please continue.
Okay, and so going into the next year, I think the Fed will finally start realizing that they've been hiking aggressively so much that they need to back off a bit. And I don't think they will completely stop, but I think they will acknowledge that we've only been less than a year of raising rates. It was last March. So it usually takes over a year to see these impacts. So I think by next year, beginning of next year, they will really start changing their monologue, so to speak, and start easing. Not easing, I don't mean easing by cutting rates, but just slowing down the aggressive nature of which they've been hiking.
Yeah, I mean, they've also got the balance sheet unwind, so we'll see how that plays into it because that takes liquidity out of the market. But I want to get your take on bankrupt crypto trading platform FTX. It's facing a class action lawsuit right now by investors, which claims the company violated Florida law, made consumers suffer more than $11 billion in damages. We've got celebrities, Tom Brady, Stephen Curry, Shaq O'Neal, all listed in that suit. Peter, does this have a contagion effect here? What does this mean for crypto and the broader markets?
Well, Maria, you know I've been a big critic of crypto for the past 2 years. So it's a sad thing that it's come to this point because, as you said, a lot of people are going to feel pain. However, the good thing about this is maybe we've caught this early and that this might be the first one of many issues like this, and I'm very worried that there will be contagion. Now, the good thing about that, if there is anything good, is that this is not impacting the U.S. banking system. So I do think it will be contained within the crypto hemisphere, if you want to call it that. But there will be more. And I've always said that crypto is, frankly, a hoax. And the good thing about this, another good thing, is finally we are all starting to look at this with much more scrutiny. And I have been imploring people to do that for the past 2 years. It's sad that this thing has caused that focus, but as we see now, there is an intense focus on this, as I don't even call it an asset class. But I do think that we will see much more fallout, and it's a very, very serious situation.
Hey, Peter, it's Mark Tepper. Good morning. As we talk about this crypto contagion, it seems like, at least for right now, those companies that are most negatively impacted seem to be the crypto lenders. You have Genesis, Gemini pausing withdrawals. But if you actually go back to, I think it was June or July, summertime, this didn't get a lot of attention, but Voyager Digital, who was also a crypto lender, went belly up in the summertime. So that might have actually been the first sign that things were wrong, but people didn't really pay attention to it. And I feel like a lot of crypto investors kind of got blindsided by this FTX event by not paying attention to what happened in the summer. But my question for you is, despite all the negative stuff that's been happening in the crypto space, Bitcoin has been at like 16,000, and it's been holding that over the course of the last week or so. Why do you think that is?
Well, I do think that we have been tracking the desperate nature of the bulls of crypto. If you remember, they first came out with saying, I think it was a storage of value. I don't really know what that means, but that was their first narrative. Then, if you remember, the second defense was, when that didn't work, was it's a hedge against inflation. And now what they're saying is, isn't this wonderful that this has happened, because this will shake out all the bad players, and what will be left are the good players. So I think the desperation, there's a lot of people that support this asset class, and they will still continue to create new ways of defending their position. But as this unfolds, I think those defenses are showing great weakness, and it has puzzled me too. I think the intense interest in the asset class. I've said that COVID, the three things that we will remember about COVID are masks, social distancing, and the crypto bubble. And I do think it's been a confluence of events that have really propped up this issue. And as we go further, as we see more really awful details that I think will emerge from all the lawsuits and the bankruptcies, I'm actually thinking that it might be the end of crypto.
Wow. Big statement.
Yeah.
Bob Nardelli?
Hey, Peter, Bob Nardelli here. Good morning. I'd like to take you back to the consumer for a moment here. We saw the headlines today, retail sales up 1.3%. And then we saw Target announced they were taking their forecast down. Brian talked about heavy discount to get rid of inventory. So I just wonder your perspective. When I was at Home Depot, I always used to ask how much was volume, how much was price, and how much was mix. I'm wondering if this uptick is more about price than it is volume. Do you have a view on that?
I do, and I think, in a normally operating economy, those metrics are extremely important. I do think right now, since we're still emerging from lockdowns and the chaotic nature of supply chain, et cetera, it's going to be messy. So I think you will see some retail companies doing quite well and answering those questions of the metrics very strongly, but you'll also see companies like Target that are just in the middle of breaking this through. Their shrinkage factor was very alarming, and I think that other companies will probably report the same types of things depending upon the political nature of these companies. Mm-hmm. But once we emerge with more strong, green signals on the screen, so to speak, then these metrics make more sense. But right now, I feel like we're in the middle of emerging from a battle, and so we should expect to see mixed signals.
Real quick on the Fed, we've got the next meeting kicking off next month. Federal Reserve Governor Christopher Waller yesterday said, quote, looking toward the FOMC's December meeting, the data of the past few weeks have made me more comfortable considering stepping down to a 50 basis point hike. It comes after the Fed's previous 4 consecutive 75 basis point hikes. And that was sort of the talk of Wall Street yesterday, how pretty much a number of these Fed officials are making it official that it's likely going to be a 50 basis point move in December, Peter. Is that what you're expecting, and is that priced into the market at this point?
I am expecting that, and I am not only expecting that, but I'm actually praying for that, because I do think that that is the next step we have to take. When the Fed gave their narrative last time, Maria, I do think it was more positive than people interpreted, because I think they've said they're going to go slower. And to me, that means they're saying, okay, we know that it's going to take some time for our changes to show baked-in results. And so as we buy the time, that gives us more time to look at the data and say, okay, we maybe don't have to raise 75 basis points for the next several meetings. And I do think that this next meeting, we will see them. At the minimum, they will say, we are starting to see the impacts of our hikes, and we're watching carefully. That doesn't guarantee that they're going to lower it to 50, because remember, I think they view the equity markets as a bunch of eager children that are hanging on every word they make. And the second they say something positive, as we've seen just with the CPI number, right? We saw the market take off like that. So I think they're very, very careful about how they're managing this to manage the optimism of the markets.
For sure. Peter, good to see you. Thanks so much. Peter Andersen joining us this morning. Quick break, and then Republicans taking back control of the House of Representatives as former President Trump announces his 2024 bid this week. What it all means for the future of the GOP, why Florida Governor Ron DeSantis is telling everybody to just chill out right now. That's coming up. Stay with us.